All right. Testing the mic. There we go. We got it. What's up, everybody? Welcome to CryptoNITE, episode 1. I am Brada, I guess, since that's more of a video game personality, but I've got here Rhett. So, Rhett's smart. Rhett makes his video game personality and his real life name the same, so he doesn't have to go through the awkwardness of announcing themselves as something weird like Brada.
That was mostly accidental.
Unintentionally genius is what it was. Welcome everybody out to CryptoNITE. So this is a different take on the stream, the channel, where we are going to talk about different cryptocurrency topics. The title of today's live stream, podcast, whatever you want to call it, is Cryptocurrency and DeFi Basics. I've been learning a little bit about that since meeting with Rhett in real life. After a few years of just playing HOTS together, we finally took the leap. So also, we've begun doing these crypto conversations where I've learned a little bit more about decentralized finance and decentralized exchanges and all of that. And it's been really cool. So that's really the purpose of today. If you're in the chat, give us a shout. It's our first time doing something that isn't a video game. Navar. We got Navar in the chat here.
What's up, Navar?
Navar is a regular for, used to be like a big regular and has kind of circled back to the Brotherhood recently. Are you here to learn about crypto, Navar? Anyways, I'll introduce Rhett a little bit more. So, like I said, met Rhett recently in real life. When are we raffling off the Bitcoin? Welcome, Stripe Tech. We'll get there. Rhett, he's definitely a billionaire. That's why you're here, right? So he'll take care of that for us. But back to introducing Rhett. Met him in real life recently. You work with machine learning, right?
Yeah, data scientist at a company called HireVue, which is machine learning for hiring, video job interviewing software, and then we use that information to determine who's more likely to be a good candidate.
Excellent. So machine learning by day, crypto by night.
Yeah.
Crypto Batman. That could be Rhett's on-screen persona, honestly. Navar says he actually knows a good bit because his dad is a big investor. That's very cool.
Oh, nice.
So this will be a useful conversation for you, probably. So going back to Rhett, tell us a little bit about your experience with crypto, Rhett.
So we'll start off. I won't claim that I'm an expert by any means, but
he's an expert.
But
relative to me, Rhett is an expert. That's all everyone needs to know. Okay.
So I took interest in cryptocurrency. Well, I remember talking to some people about it clear back in 2010. Did not buy any. Did not fully understand kind of the value of Bitcoin. It was just Bitcoin back then. Took renewed interest in it maybe in 2017. A friend of mine, Matt, who may be on the stream,
also known as Flim.
Yeah, Flim talked to me about it. I got really interested, so I started investing in cryptocurrency and learning more about it back in 2017. Kind of went through what's known as the ICO craze, which was interesting. And
that was great.
Yeah, very interesting. And then more recently, there's been this whole surge and all these things being built on, mostly being built on the Ethereum blockchain, decentralized finance being the main thing, and then another big kind of whole industry being built out around NFTs.
Let's get Rhett out from behind the chat here.
Yeah. So anyway, I just have been kind of obsessed / manic over decentralized finance and cryptocurrency for a long time. So I spend a lot of time thinking about it and talking about it, and
thank
10
you
hours a day on podcasts.
Thank you for continuing that conversation, right, and looping me back into cryptocurrency, right? A little bit about me. I got into Ethereum mining around 2017 or late 2016, I would say. And obviously, DeFi is totally different from just mining cryptocurrency. So it was really interesting to learn. This whole new world of DeFi existed out there, and I had no idea. So it's a really cool topic. It's really interesting. It's growing rapidly, right? Some of the volumes that you're seeing on these exchanges is just crazy. Um, we got Jamin Long, what up, Rhett, and Flim, LMAO Manic.
Nice.
Flim, would you
Hey.
identify as a manic crypto person as well, or are you taking off, Flim?
And hey, Jamin, thanks for coming. Glad to have you.
I'm lower key. All right, that's fair. So we've got 22 people viewing right now, so I think we can kind of start with our program. The idea behind episode 1, right? We are literally in an unfinished basement. We threw this together. Um, we want to turn it into something bigger, and starting out with foundational topics, right? Want to talk about what is cryptocurrency, what is decentralized finance, what are decentralized exchanges, um, kind of what's that world all about, and then wrap up. I think we'll probably go for between an hour and 2 hours is my guess in total. Just kind of depending on how the conversation goes and how the topics flow and whether there are still more questions or not. But we'll segue from what we have prepared, which is some foundational stuff. I'll be honest, this series is really about me learning as well, and we'll segue into a Q&A, right? So Elon Musk, good question. Cardano versus ETH. I think Rhett expected that one to come up at some point, and we will get to that in the Q&A. So
Yeah, Cardano, happy to speak to that one shortly. So
let me actually pause. We've set up a bot we've set our bot to give definitions. So if you come into the stream late and we're talking about something you're not sure what it is, ask, and if we've got a bot command, we'll throw it in there so we don't have to keep re-explaining. Is the idea. So we can start out. What do you want to start out with? Bitcoin.
Sure.
So we'll use the Bitcoin command as a sample. It's exclamation point Bitcoin. Hit enter, and the bot will respond. So we'll talk about three main things, right? Bitcoin, decentralized finance, and decentralized exchanges. So go ahead, Brett. Start us off on Bitcoin.
For sure. Hi,
Elon Musk.
hi,
Nice.
Helen. By the way, glad to have you here too. So, so I think just to kind of set the basic stage, and just to reiterate, this is not going to be. None of these are going to be a highly technical discussion, and
That isn't to say that we won't get into technical aspects in the future, right?
yeah,
But we're starting with the basics, and we're going to build on that as we go with multiple episodes.
yeah.
That's
No,
the idea.
no question is too basic, and I will try to keep things from being overly complex or technical. So to kind of start, I think it's good to think about kind of what kind of
Will and Red out from behind the chat here, man.
So to start off, I think it's good to just talk about Bitcoin, what it is, and kind of how it pioneered the space. So there was interest before Bitcoin for a long time in having a native digital currency. But there was this problem that is really hard to solve, which they call the double spend problem. So if you naively wanted to create some digital dollar and you made a bunch of unique images of dollars and you said, okay, these are my dollars, and then when I send one to Phil, then now he has that dollar and then he can send that to someone else, etc. But there's not it would be hard to ensure or to know if I had sent that same dollar to Phil and sent it to Jennifer. And that issue made it really hard to come up with a digital currency. So there had been this somewhat recent development of a thing called a blockchain, and some unknown person or persons named Satoshi Nakamoto came up with the idea that, hey, you could use a blockchain to make a digital currency because it solves this double spend problem.
Because you're tracking every transaction and every digital dollar.
Right? Yeah. So what a blockchain is on the basic level is it's a ledger. So a ledger just tracks who has sent money to whom. But it's a ledger that you can never modify the past. You can only append new transactions on. So if I send Phil a digital dollar or a Bitcoin, that ledger entry cannot be undone. We can add more entries to the ledger, So it's a chain of blocks. Each block is a set of transactions, and you're chaining them on, but you can't change anything in the past. So it solves the double spend problem, and you're able to have this digital currency. And there's a lot of really nice things about that. So that's kind of what Bitcoin did, and it was this really amazing thing. And that kind of began the whole cryptocurrency revolution. After that, some kind of copycats came out that did just similar things, but maybe like, oh, the mining was a little bit more efficient. Um,
Now, when you say some copycats came out, are you saying they came out very early on? I
Somewhat,
remembered Bitcoin being really sort of not ridiculed, but not taken seriously in the initial years,
yeah,
right?
yeah. It was basically just Bitcoin for a while, and then Litecoin came around, and Litecoin is almost identical to Bitcoin, only it's mined slightly differently.
I've
You know,
heard also that the comparison between Bitcoin and Litecoin is where Bitcoin is more of a digital gold and Litecoin is a digital silver. Whether or not those things are accurate or not, that's one way that those things have been,
branded. Yeah,
branded in the past.
yeah, yeah. So Bitcoin, yeah, and I buy into the Bitcoin digital gold thing a little bit more than the digital silver argument for Litecoin. But
Mhm.
um, to demystify mining, just briefly, really quickly, it's so miners or validators. Basically, all they are computers that make sure that the blockchain stays secure, meaning that no one modifies past transactions. Um, and so they are just the kind of infrastructure to keep that blockchain um, from being modified. And for doing so, they get paid.
Excellent. I want to address here. FX, welcome to the stream. We are starting a series of crypto chats. If you have an interest in learning about cryptocurrency, decentralized finance, we are brought Rhett in, and we're talking crypto. We're talking DeFi. We're going to learn about these things, and just trying to bring some of these things into the mainstream because they are growing really rapidly, and a lot of people are wondering about what's going on with crypto, and we're, like Red is saying, we're trying to demystify some of that, right? So anyways, keep going. We just got done
Yeah.
talking about what role miners play.
Yeah, so sometimes people can get a little bit too in the weeds with mining and all of that, but basically it's just there are computers that keep the blockchain secure, and they get paid for doing so. So, um, so kind of the next innovation after Bitcoin invented the blockchain was with Ethereum, and they added to what Bitcoin did, so they're a blockchain as well. Um, but they also have a programming language associated with their blockchain that empowers a thing called smart contracts. Smart contracts basically turns Ethereum into a platform that you can build on top of.
Rather than just
So,
digital money,
yeah.
right?
Yeah.
So we've gone from Bitcoin, which is I can send Bitcoin to anybody, and that transaction can be logged and can be irreversible, to I can now build applications on top of the blockchain with Ethereum.
Yep.
Right? Is that correct?
Yep.
Okay, so I'll take this role on periodically where I will, repeat what you're saying in a different way to make sure that I understand and that we've gone through. We're trying to boil things down essentially. So
Yeah, that's great. So, like what a smart contract is and why that's powerful, that can be kind of hard to understand if you're just like, okay, it's a programming language associated with this blockchain. What can you do with it?
mhm.
And basically, you can say, okay, I will send you this money under certain conditions. So, like the really kind of basic example a lot of people take is like if you and I had some bet, and I said, hey, I bet X will happen, and you think Y will happen, and we bet one Ethereum,
Mhm.
then we could write a little smart contract that said, hey, if X happens, you send an Ethereum to me, and if Y happens, I send one to you. And once we've entered that smart contract, neither of us can back out of it. It just automatically executes. Um, and
Because we've
um,
sent the currency to the contract.
you
Is that
we
correct?
yeah we like lock that our Ethereum up in this smart contract, and then it would
It will
you know.
execute what it
Mhm.
was created to execute.
Yep. Yeah, so that's a really basic kind of explanation or a basic example of one simple thing that you could do with a smart contract, but there's much more complex things that you can do. And so all of decentralized finance, which we'll talk about in a minute, is using smart contracts, and all of the whole NFT thing that has like kind of revitalized digital art marketplaces and even gaming solutions. That's all using smart contracts as well.
Excellent. That's good to know. I actually didn't know that about NFTs leveraging smart contracts. So,
That's why you don't
so
see any on Bitcoin.
interesting. So moving from topic to topic, right? We've talked about Bitcoin, we've talked about Ethereum, we've talked about smart contracts. So leading into DeFi, right? DEFI, decentralized finance. I'm going to throw that definition up for everyone to check it out. You also can use these commands if you want to check out the definition of Bitcoin. Go ahead and type exclamation point Bitcoin, and the bot will give you the definition. And we'll add more definitions to this over time as we get to new topics. So for decentralized finance, I'll read this, right? We've written here that what really Rhett's written here, it's a blockchain-based form of finance that does not rely on central financial intermediaries such as banks. And it refers primarily to applications on the Ethereum blockchain powered by smart contracts. So we went through two of those things, right? The Ethereum blockchain facilitates smart contracts, and that is what decentralized finance is leveraging to exist.
Yep.
Is that correct?
Yeah.
Excellent. So tell us a little bit more.
So yeah, decentralized finance really emerged. The first DeFi projects were built maybe 2017, 2018, but it didn't really take off till a year ago. And it is, think anything finance does, but done in a much better way, in my opinion, built on top of Ethereum. So kind of broadly speaking, what the major like categories of DeFi protocols that are being built are decentralized lending. So just like you would lend or borrow using a bank, we can lend and borrow peer to peer. There's several decentralized lending platforms.
Let me actually ask you a question about that peer-to-peer
Yeah.
aspect, right? Out there in the real world, for example, we just bought a house.
Mhm.
I go out there and I get a loan from the bank, right? So there's a key difference there in what you're saying, in that lending occurs peer to peer. So I could have purchased a house in theory, but I could have gotten that loan from you or somebody else who is a crypto investor. Is that correct?
Yeah.
Okay,
Yeah.
perfect.
Or from a whole bunch of us together. And in a sense, that is what a bank is doing. I deposit into a bank and then they lend to you. They're lending my money to you, but they are a centralized entity doing it and they're taking a return for doing that. And so you can replace the bank with some code instead. And so you have a more lightweight version of a bank that's doing the same thing, but without taking that return that the bank is taking and without all of the overhead that they need.
Excellent. Awesome.
So one example within decentralized lending and borrowing, just an example of like how much better it is in a lot of ways, is you can do a high yield bank account right now, high interest bank account, and get like maybe 0.5% from Wells Fargo, if that. There's a cryptocurrency equivalent where you're still lending dollars. You can still take out at any time, so it's just like a bank account. The yield on those is more like 10 to 30% instead of a 0.5%. And there's a number of reasons for such a higher number. But it's just like, well, if I'm going to have a high yield bank account, why use Wells Fargo when I can do what's called stablecoin lending?
One of the interesting things about that, right, is if you get into the banking world a little bit, right, speaking from a little bit of investment banking experience that I've had, banks are actually generating very large returns, right? When you deposit your money into a bank, it gets rolled into a very large lending program or some other type of financing the economy type of activity, and they make a huge return. They're only sharing 0.5% of that with you, right? So it makes sense to me to think that in a world where the bank is replaced by code, that more of those returns would accrue to you rather than the central entity, right? What do
Yeah,
you think about
so
that?
so that's part of it. Yep, I think part of it is that it's so much more lightweight. So JP Morgan employs tens of thousands of people, maybe hundreds of thousands, to facilitate their operations.
Right.
And these DeFi protocols employ like maybe 10 people that built them, and then once they built and deployed them, it takes nobody to maintain them.
It's done because it happens automatically, right?
Yeah,
Real quick,
yeah.
I'm getting some reports that the stream is pausing periodically. Can someone confirm that for me? I'm not seeing anything on my end. Just want to make sure that we're working well. Anyone in the chat?
Maybe that was a time when we just paused.
Looks good to me. Suzumaki! Welcome, my friend. It's been a long time. Another person I've met on in real life. And a gas toad. Good to see you as well. Thank you for the feedback.
What's up, Suzumaki?
So circling back to the conversation, it looks like we're good. Um,
Okay, great.
yeah,
Yeah,
multiple people confirming that we're good. Great. So that gives me some confidence because I'm not seeing any indicators that we're having some issues. So
good.
um, so going back to our conversation, right? We've touched a bit on decentralized finance, and one thing that I learned over some recent research is that we're really recreating the traditional finance system inside of DeFi, right? A lot like you're saying, I can go to Wells Fargo, I can have a high yield savings account. Well, there's a crypto equivalent for that, right? And more crypto equivalents for traditional financial products or structures are happening. And so, what's your take on the distant future? Do you think we're going to be able to recreate everything inside of DeFi, or how do you think or do you think we'll continue innovating and even surpass what we see in the traditional financial system?
Well, I mean, there's already been some innovations in the sense that like there are ways that these things have rebuilt traditional finance in what I view as much more robust ways. So, for example, taking the lending and borrowing aspect, um, some of these lending protocols have experienced multiple like severe market meltdowns, like worse than the stock market meltdown in 2008. But there have been none of them that have gone under, like you've had with these banks that have ended up posing like systemic risk to our economy,
Mhm.
because hey, like if some major bank goes under, like they could lose all of my money, and then there's who's left holding the bag, etc.
Right.
Um, these decentralized finance protocols are much more resilient. They're like much more anti-fragile than their real world counterpart. So in that aspect, I think part of the innovation is that it's being done better in a lot of ways. Um, I can't think off the top of my head anything being done in traditional finance that you could not do in decentralized finance, but there may be things that end up making more sense in a traditional bank. I don't know.
Interesting. That'll
Some
be
of
interesting to start talking about more specifics as we go on with future episodes, right?
Yeah, yeah. By the way, just really quickly, a few of the other main kind of areas of decentralized finance, just for a kind of a high level overview, is there's decentralized lending and borrowing. That's pretty obvious what that is. There's what they call DEXs, decentralized
Let me
exchanges.
put that definition up since we're going to move on to that. So
And
I'll read this one out and then you can
yeah, yeah.
keep going here. Decentralized DEX stands for decentralized exchange. So when you hear DEX, think Coinbase or Robinhood, but with no central party. So it's a type of cryptocurrency exchange which allows for direct peer-to-peer cryptocurrency transactions.
Yes.
An example of that would be I'm exchanging Ethereum for Bitcoin, and I'm able to do that without using a company like Coinbase or Robinhood, but rather a smart contract that just enables that. Right?
Yes. Hmm.
Excellent.
Yep. And there's a number of reasons why these are better, a number of ways they are better. Um, for one, you don't have the GameStop problem of, when GameStop stock price started surging, exchanges, well, brokerages basically had to shut down trading. And there's a whole bunch of reasons for that, which mostly come into like capital requirements of clearinghouses to make sure that people actually get what they paid for. Um, if that were being traded on a decentralized exchange, not only would they not need to shut down, they couldn't shut it down.
Right.
And the same has happened in cryptocurrency in the recent kind of meltdown a couple of months ago. Most of the centralized exchanges, Coinbase, Binance, etc., went offline for a small amount of time because there's such a surge in demand that their servers couldn't handle things. None of the decentralized exchanges went offline. The other benefit is that it's a lot cheaper in a lot of ways. If you transact on Coinbase, you pay 1.5%. If you transact on Uniswap, you pay 0.3%. Um, so so there's other benefits there as well, and then there's assets that you can find on decentralized exchanges that might be harder to find on Coinbase.
Right.
Um, so that's one of the other big categories, and then maybe before we uh, dive any deeper to that, I'll just touch on like a couple of other kind of categories. One of the other big categories in decentralized finance is what I would call synthetic assets. The most common type of synthetic asset is what they call stable coins, and these are just tokens that are pegged at $1. So, hey, I want to buy my groceries with a cryptocurrency. I don't want to use Bitcoin because it has such a volatile price movement. I want to still do it in dollars, but use a cryptocurrency. You could use a stable coin. But
So
there are
when you say
other.
the value is pegged to a dollar, um, a stablecoin worth its salt will always have a value that is within a cent of $1,
Yeah.
right? I've
Yep.
seen changes, changes in Tether, for example, or USDT, but it's 99.8 cents or right. It's
Yeah.
extremely close at all times.
Yeah, you can have minor fluctuations, and there are some really experimental stable coins that have like completely like lost their peg entirely.
Hmm.
But the well-established ones, USDC, DAI, USDT, they've tended to hold their peg pretty well, and they're mostly um, basically doing so with collateral. So USDC you could actually exchange for a dollar.
Interesting.
Um, and they have a dollar in their bank account for every USDC. So that's the most common type of synthetic asset, but there are many others. So you can buy synthetic Tesla stock on in DeFi, and it tracks the price movements of Tesla stock, even though you don't own the stock. There's synthetic Apple stock. There's synthetic oil. It'll track oil price movements, or inverse synthetic oil. It'll inverse track oil price movements. So these synthetic assets, there's a whole bunch of them, and they kind of plug into all of this and empower a lot of cool things as well.
So one question that comes to mind about synthetic assets, right, is why would I want to own a synthetic Tesla stock rather than own an actual Tesla stock? What's kind of the reasoning for the existence of the synthetic
Well, there's a whole bunch of reasons for that. One, you may live in a country where it's hard to get access to the
stock
markets where you
market?
can buy Tesla stock.
Interesting.
Either technological limitations, or maybe you live in a country where they've just locked you out.
Hmm.
So that's one aspect. Another
That goes
aspect,
back to how cryptocurrency is really for everyone, right?
yeah,
There's no locking anybody out.
yeah, they talk a lot about how it is um, censorship resistant.
Hmm.
So a lot of early cryptocurrency adopters were people in kind of living under totalitarian regimes where it's like, well, I don't want the government just to take my money. So
Or countries with runaway inflation, right?
yeah, that's another place where it's used more commonly, where your actual currency is getting destroyed. Um, so so maybe you live in a country where you can't get regular Tesla stock, or maybe you're more digital native and you like using the rest of DeFi, and you're like, hey, I want to get a decentralized loan from one of these decentralized lending protocols and use that to buy Tesla stock. I can't do that on Robinhood
Mhm.
without a lot of friction, and maybe I can get better lending rates in DeFi than Robinhood would give me in a margin account. So I can instead do it in the crypto world and get all that price exposure in a better way, borrowing with a lower rate, etc., than I could do from, Robinhood or Fidelity or whatever.
Right. So actually, we've got a question in the chat here that's very relevant. Um, the question is, does money put into synthetic Tesla stock actually give capital to Tesla? Based on what you explained previously, you don't actually own the shares, so maybe not, but I'm not
Correct.
sure.
You don't own the shares, and it does not give money to Tesla. Um,
So maybe a follow-on question to that is, how then do they actually peg it to the price fluctuation of Tesla? How do they accomplish the same fluctuations?
that's a good question, and we'll see if I can explain it basically without being overly confusing. But one of the main protocols that does this is called synthetics,
Mhm.
and what they do is you essentially have their native token, which is called SNX, used as collateral to create the S Tesla, they'll call it,
Which is
and
stands for synthetic Tesla, right?
yep, and that tracks the Tesla price movement by looking at what's called a price oracle. So there's
Okay.
this oracle, there's this thing over here that says, hey, here's what Tesla price is.
Mhm.
And it tracks that. And then you want it to not lose its peg, just like you don't want a stable coin to lose its peg. And the way they keep it from doing so is by keeping excess collateral of SNX token.
Okay.
It's the same thing essentially that MakerDAO does to create DAI, which is a stable coin. So really quickly, what DAI is you can use Ethereum or Bitcoin or some other things as collateral to create this dollar peg token, but you need excess collateral. So use $1,000 to generate $500 of DAI.
The reason for that is for the fluctuations. If it goes up, you need that extra collateral, or
So the excess collateral basically it's a method of keeping it from losing its peg. So you say,
Mm,
okay, hey, this $500 of DAI is backed up by more than $500 of Ethereum.
okay, makes sense.
But if Ethereum starts dropping in price, you could get liquidated
Mhm.
because the protocol requires you to keep a certain amount of over collateralization.
Okay.
It's kind of two parts. You have an oracle, this kind of thing that looks at Tesla's stock
Sounds
price.
kind of like an API almost.
Yeah,
Interesting. Okay.
yeah. So you have an oracle that tracks Tesla stock price, and you say, "Okay, I'm gonna match that." And then to make sure that people don't just say, "Well, why is this tracking that?" You have um, excess collateral underneath to hold it to that oracle
So it
price.
stays legitimate because of the excess collateral.
Yes. Yeah.
Interesting.
Yeah.
Okay. Awesome.
Yeah.
Hey, great question, by the way.
There have
Shipsky7.
So one quick point on there. There have been attempts to create stable coins like dollar peg tokens that don't have collateral under the hood, where it just like looks at the oracle and has some sort of other mechanisms to keep it. No one has successfully ever had an under collateralized or non collateralized stablecoin or synthetic asset that actually stays pegged at its price.
So is it safe to say then that failing to do so, failing to over collateralize, is because it's not fundamentally sound, it never works? Is that kind of what you're getting at?
Well, it hasn't worked yet, so I wouldn't trust one. And so if someone came up with a stable coin and said, "Hey, we figured out some way to keep this pegged at a dollar with no collateral,"
Mhm.
I would say, "Okay, I'll watch your price for a year or two and see if you can actually weather some storms
Right.
and keep to that." Some people think it's theoretically impossible. Some people think that it is possible. I think it's maybe impossible, but it, if you're gonna try and use one of those, like understand that it's highly risky until it's proven itself over time.
Right.
And
No.
none have done that yet.
Awesome. That's a really good explanation. What do you think? I mean, we've kind of gone through all of our definitions that we agreed on before the episode. Should we pivot into Q&A? I think we're kind of there, right?
Yeah.
So we have
Yeah.
another question here from Dubious Toad. How are you, by the way? Says, so people are actually getting mortgages and other loans in crypto, which I've actually talked with you a little bit about this. I think this is a great question. So
Yeah. So mortgages and the other types of loans you think of in real life there is a tiny bit of that happening. There there are some projects working on decentralized lending for mortgage solutions. And you could, to some extent, use current DeFi lending protocols to buy a home, but that's not the main thing they're being used for now. And the main reason is essentially nearly all of decentralized lending is over collateralized lending. So if you want to borrow $500,000 for a home, you need to have maybe $1 million of collateral.
I was about to say that we don't live in San Francisco, but home prices are definitely not going the right direction where we are. So very astute observation. So keep going. Sorry.
Yeah, there are ways to overcome that requirement, and even ways that you can use the home itself as collateral, which is essentially what the bank is doing,
Mhm.
and that's being done to some small extent. But that aspect of decentralized finance still hasn't really been built out much.
But you
Yeah.
think it's going to go that direction over time?
Yeah, there's people working on it right now. There's a little bit of it being done, but that's in stage one, it's more like money markets that's being done. It's over collateralized lending. So I guess what you could say, most of current decentralized lending, most of what it looks like is very similar to a margin account in Robinhood or your stock brokerage. So what Robinhood says is, hey, if you have $500,000 of stock in Robinhood, we'll give you a loan up to, say, maybe half of the value of your stock. So we'll give you a $250,000 loan. We'll charge you 5%. But if the value of your equities start dropping, if the stock market crashes, we might force you to sell some of that to pay back the loan. So we make sure that we could never lose money.
And that's known as a margin call.
Yes.
Right.
Yeah. So many of these protocols work in that same way, only they're a lot more flexible. So if Robinhood said, "Hey, we'll lend you $250,000 on margin," there's limitations to what I can do with that. Whereas if I go get if I have $1 million of collateral and I go get a $500,000 decentralized finance loan, I can do anything I want with that. I just need to pay it back with interest in order to unlock my collateral that I locked up.
Mm-hmm.
So I could buy a home with it. I could go buy stock with it. I could go do whatever I want with it. Um,
But in the current iteration, over collateralization is a requirement.
yes. Mhm. Yep.
Interesting. Great question, Dubious Toad.
Yeah.
So at this point, we've pivoted into Q&A. Like Rhett said earlier, no question is too basic. Whatever you're wondering, whatever you're wondering about, just throw it in the chat, and we'll do our best to give an answer. Right? I feel fortunate to know Rhett, so that I can learn more quickly about these things. But let's go to our next question. Should I sub or buy crypto? That is a really, really hard question, Strife Tech. But hopefully, we're adding some value to your life with this CryptoNITE episode.
So maybe both.
Yeah. Hey, his words, not mine. All right.
I see a little bit back, by the way. Navarre asked if we're going to be doing this just tonight or regularly. Hopefully, we'd like to start doing it regularly. If you guys like it, if people want to see more of this content, then we're thinking maybe we do it once a week or something.
Yeah, we really, in the IRL world, crypto lunch has been growing a lot. A lot of people interested in talking about crypto. We're getting together, we're having conversations about it. People are talking about different positions they've taken or what's going on or the development of DeFi overall. And I realized that a live streaming platform is kind of perfect for having conversations about topics like this. And we can get some of this content on YouTube as well and just facilitate sort of the mainstream movement for decentralized finance and cryptocurrency. A few years ago, Bitcoin was considered very fringe, and I think it's kind of come into the mainstream a bit more over time. But in my view, there's this applications built on top of the blockchain that are so different, so unique than just cryptocurrency, that are even less in the mainstream, that are really, really unique, really powerful. The idea of getting a mortgage with crypto sounds awesome, right? And so that's kind of the reason for CryptoNITE, and we hope to really upgrade what we've got here. Get a camera that fits both of us in here without being 6 inches apart. But going back to the Q&A here, what macro events would have to take place to tank crypto completely? Another great question. We've talked about this a little bit in at Crypto Lunch. I'll let Rhett take it away. He's ready to go. Trust me.
Yeah, so that's a big question. I think there's a number of things that could pose risks. So for one, if major governments became very hostile, that might not be considered a macro event. It depends on how you're defining that. But if the U.S. government and others became hostile to cryptocurrency and sought to shut them down or limit their usage, etc., that could have a really negative effect. You'll hear some people say, well, governments can't shut down cryptocurrency, and that's true to a point. So like it would be hard for a government to actually shut down Bitcoin or Ethereum because they'd have to find all the miners and shut them down, and that would be near impossible. But if you say, hey, we're going to ban people from using it, and if you get caught with Bitcoin, then you're in big trouble and we'll throw you in prison, then a lot of people wouldn't use it. And there would be a lot of sell pressure. So, and actually, that's probably what most of the downward pressure over the last few months was caused by, but in China. So China got pretty anti-crypto. They shut down a bunch of miners, and they cut off some on-ramps into crypto as well. And so a bunch of them left. Some people came to the U.S. and Chinese miners came to the U.S. or went to other parts of China, and a lot of Chinese owners of cryptocurrency got scared and sold, and that put a lot of downward pressure. So that would be one thing. Government hostility.
I do want to point out one other thing. We had some ransomware attacks for Colonial Pipeline, and I believe the government was able to reclaim the Bitcoin that was paid to the hackers that attacked Colonial Pipeline. and that was a negative price event for Bitcoin because it sort of threatened the notion that cryptocurrency is not immune from government intervention, but that cryptocurrency transactions are final, right?
Yeah.
Just the idea that the government could go and reclaim Bitcoin is sort of at odds with the idea that, hey, I'm my own bank. It's permissionless. It's trustless or whatever.
Yeah.
And so those types of events definitely apply. They
What's funny about that event, by the way, is it was mostly misunderstood. So
interesting.
they did not go back and modify the blockchain like some
Right,
people
right.
thought. So they didn't actually compromise the blockchain. They basically stole the wallet keys of the hacker.
And made a
So
new transaction to get it
yeah,
back, right?
yeah,
So the ledger shows the original payment and a new payment back,
yeah,
right? That's what we would see, which, like
yeah,
you're saying, doesn't actually compromise the blockchain, but
yeah,
it's that idea that oh, the government actually has a lot of control that we don't know about, right?
yeah. They basically stole the equivalent of their bank account password and then went and logged the transaction. So
I'll take a stab here at Dubious Toad's question. So you think that mining will remain a big thing that monopolizes GPUs? I've done a lot of thinking about this since I did mine for a while. One thing that you'll notice in the current market, right, especially right now, with the hostility toward mining in China, there's been a flood of RTX 3060s, a mid-range GPU, in the Chinese market, and the price has plummeted. Uh, Mining itself is very tied to current technological trends, right? How much can I get from the existing technology? So, thinking back to 5 years ago when we were talking about a 1070, the average 1070 would have 30 mega hash mining rate. You fast forward to today, a 3060 Ti, a similarly priced GPU had 60. It was double, right? So as technology advances, you get more out of that. But with extreme volatility in crypto asset pricing, the returns go all over the place, which means that I don't think, in essence, my answer is I don't think it will remain a big thing indefinitely. I think it will be a big thing here and there. But bringing it back to Ethereum specifically, right? We haven't touched on this in today's episode, but one of the big focuses of the Ethereum development team right now is to go proof of stake, which will actually get rid of mining entirely. And much of the mining profits out there is driven by Ethereum returns, and Ethereum and Bitcoin, if they go up, then a lot of the other altcoins go up, so you can make some money there as well. But there's a big gap between Ethereum returns and the next most popular currency for mining. So what I wanted to say is if the Ethereum blockchain successfully transitions to proof of stake, that will go away. Whether another currency will step up and take its place and provide returns strong enough to really monopolize GPU demand like we've been seeing remains to be seen, but it's kind of impossible to predict. Some factors that would influence that is, would that project be as robust and powerful as Ethereum, right? So some may say that probably won't happen because Ethereum is really a front runner in a lot of ways. But in the short run, I see GPU demand or supply and demand meeting and people being able to buy graphics cards hopefully very soon.
So let me give my 2 cents in this as well. Those are some good thoughts. So in my opinion, the biggest factor of all is what's happening on Ethereum. So probably depending on how you measure it, between like 95% and 99% of all cryptocurrency activity is happening on Ethereum. That's where almost all of DeFi is happening, and then a number of non-DeFi things as well. So it's it's a blockchain with a lot of people wanting to use it. And so miners make a lot of money because when people want to use it, they'll pay higher fees to transact on that chain. So almost all of mining revenues are Ethereum mining revenues. I think it's like 80% or something. Don't quote me exactly, but
It's very high.
it's the majority. And like Phil said, they're transitioning to a new, so mining or proof of work is a consensus mechanism. It's a way of securing that blockchain. They're moving, and mining uses compute power to secure the blockchain. this other type of consensus called staking uses almost no compute power, and it uses a different, much more energy efficient system that uses almost no compute power and almost no energy. It's like 99.9% less electricity usage and a similar reduction in compute power usage. Ethereum is transitioning to that. They're partway into the transition. They'll finish that transition Q4 this year or Q1 next year. When that happens, I think there's going to be a massive reduction in the price of GPUs, because all those GPUs are going to be saying, okay, where else can we go mine? Oh, there isn't much other mining profit in the system other than ETH.
A lot of people will exit the market at that point.
Yeah. So I think it's highly unlikely that, when ETH switches to proof of stake, it's highly unlikely, in my opinion, that GPUs, that crypto mining becomes like the main use of GPUs.
Yeah. Yeah, I also do think that the impact of crypto mining is understated by the corporations that manufacture GPUs. So in 2017, Nvidia came out and said it was something like 5 to 10% of their demand was crypto demand. I personally thought that they undershot that quite a bit. And if you look at the market today, the price of GPUs plummets when crypto mining plummets. More than the price of GPUs comes down as supply goes up, right? So, I do think that the general population under attributes the amount of demand driven by crypto mining. But we've been on that question for a long time, so
Yeah.
it's a great question, and it'll be interesting to see what happens. I do see a light at the end of the tunnel right now, barring, of course, ETH going to 10,000. So moving on, I do want to thank Strife Tech for the sub. I really appreciate it. You could have used the sub to buy Ethereum, but you didn't, and now it's gone. No, I'm just kidding. Actually, it was Twitch Prime, so that didn't even cost you any money. That's beautiful. Moving on, I think we've got Susie Suze1. Now that's a username right there.
Yeah.
How you doing, Susie? How do you choose which projects to invest in? Awesome question. I personally have only just begun scratching the surface of DeFi. Haven't chosen any projects to invest in DeFi specifically. I am long Ethereum, right? I believe that Ethereum is going to be a successful project, and so I've mined Ethereum in the past, and I'm just holding some Ethereum. What I do next, I don't know. That's part of the reason for CryptoNITE. Actually, I need to learn a lot more about what to do in order to decide how I might choose projects to actually invest in. So I'm going to turn that one over to Redship here, and we'll go from there.
Yeah. So, great question, Susie. And I think at the same time we can answer this earlier question about Cardano versus Ethereum that was asked several minutes ago at the very beginning of the stream.
Yes.
So
let's do that.
So, yeah. Let me give you a little bit of a history of kind of how I've approached investing. So I first got involved in this in 2017. I learned a little bit about Ethereum. It seemed like it was a really valuable thing, creating value in the world and had a lot of potential. So I bought a lot of Ethereum. And then there were these what are called ICOs. So a whole bunch of projects were coming out and they were saying, hey, we have this token that will be the token of our project. Give us money, we'll give you the token. Mostly Ethereum. Give us Ethereum, we'll give you the token, and then we will build this cool thing. And I participated in some of those ICOs. I bought some of those tokens. I don't think any of them launched anything. Basically all those tokens went to zero. And at that time, I realized,
unfortunate for many people.
Yeah, yeah. Luckily, I didn't throw too much of my ETH at those projects. And at the time I was like, okay, a lot of these will probably go to zero, but I want to support the space and things. And it felt a lot like kind of the late 90s tech boom where you had the pets.coms saying, hey, we're going to do X, give us money. And then they get these high valuations without any real business. But now it's a much different scene. For one, projects, they will just build a product and say, use our product, and then we'll give you the tokens, which is, I think, a better and more fair way to do it. But also, you can just look at projects and say, okay, is this project doing something valuable? Is it getting a lot of usage? And does some of that value accrue back to the token holders? And so you say, okay, MakerDAO, they have billions of people using it as a lending protocol, or billions of dollars. I don't know how many people, but so it's being used heavily. It's generating a lot of revenue, and you can say, okay, you can just evaluate it based on traditional metrics. So these days, kind of my paradigm is more, I will invest in projects that are doing things with real world value and getting adoption in doing them. So a lot like I would say, hey, you know, I'll buy Apple stock over pets.com because Apple is selling things people want, they're making money, that those earnings are coming back to Apple shareholders. So kind of a similar framework. Um,
That
um,
makes a lot of sense.
and actually that's one of the reasons why clear back in 2017 I bought some Cardano. Coming back to that question, but Cardano, I wish them the best. I hope they have success, but they have failed to launch. They don't have smart contracts yet. They've been talking for a long time about how they're eventually going to have them, but because of that, no one's building on their blockchain. It's what some people would call a ghost chain. There's just not any activity happening there. And so my view is, if they launch smart contracts and if people start building valuable things on there and getting use at scale, then I'll buy some once they show me some value. So I once owned Cardano, I've sold it, and I won't buy it again until they show some real world value. One other quick aside on this topic is, like, I think there's kind of two categories of people here. There's like the uber nerd, manic over DeFi people like me that will research a lot of these things and take a lot of interest in that. And then there's other people who maybe want some exposure in the space, but they don't want to spend 50 hours a week reading about cryptocurrency. For the second type of person, there are already some really good vehicles for that. So just like, you can get really good returns in the stock market by buying S&P 500 index funds, and then you don't need to be picking and choosing which tech stock to buy. There's a thing called the DeFi Pulse Index, which is it's like the S&P 500 for DeFi protocols. So it's market cap weighted index token, and you buy that, and then you're automatically buying a whole bunch of DeFi tokens under the hood, and you're buying DeFi tokens that are getting adoption. So that is a much better vehicle, I think, for most people to invest in cryptocurrency. So, you buy that, you don't have to be researching every single DeFi project. You can just buy it and forget about it. So I think for most people, I'd say buy some Ethereum, buy some DPI, that's the DeFi Pulse Index, and then don't worry too much about it. And then for others, that's kind of the framework I look at. Is I say, is it solving a real problem? Is it being used at scale? Is it having growth? Does it have a good team, etc.?
Yep. Awesome. That's a great answer. So we have a follow-up question on synthetics. Does this mean that the issuer of the Tesla synthetic stock buys Tesla as collateral to hold the peg? If not, doesn't that mean the exchange runs this risk of crashing if the price went up too much? So based on what Rhett said earlier, the synthetics are collateralized by the token for the DeFi institution.
Yep.
Is that correct? So it wouldn't actually be actual Tesla stock, right?
So that is another way to create a Tesla token. And I hope that the SEC will approve these sorts of things to be done, where you could just say, hey, we're going to take Tesla stock and create a token associated with it that's one-to-one backed, and now you can trade it in the DeFi world. And like Overstock.com actually did that, but you can only trade the Overstock tokenized stock on this one specific exchange owned by Overstock.
Is that a T0
yeah.
exchange?
Mm-hmm. Yeah. So theirs isn't like on DeFi; it's just within their own little walled garden. But that is one way you could do it. Is you could have one-to-one stock backing, and it would be really good, honestly, for equity markets and really good for the American people. That's not approved at this time. So yeah, like Phil said, the collateral backing it is SNX token. Now you're right. If there's a divergence, if either Tesla stock price goes way up or SNX price goes way down, you could go underwater. And so these sorts of synthetic asset protocols, they have a liquidation mechanism to keep everything over collateralized. MakerDAO does it with DAI to stabilize their dollar, and Synthetics does it with these. And so you say, okay,
so the liquidation protocol is Tesla price has shot up or SNX price has plummeted. Liquidation means what?
Liquidation means someone can close out your position. And some of
So if
these work
I've purchased S Tesla, right, synthetic Tesla, and one of those events happens, how do I get liquidated is my question.
right. Let me clarify, by the way, and say that there are a number of different ways that these synthetic assets are being created. This is just one of the common ways, and I would need to review the details of the synthetics protocol specifically on this detail. But most of them work similarly to this, or in another. There are various ways to keep excess collateral. So let me just put that asterisk.
Okay.
So there's like synthetics, there's mirror, and some of these different ones, and then there's MakerDAO, etc. But the idea is very similar. So like we were talking about how you can take a margin account in Robinhood, but they will force you to sell some stock to pay your debt if you came at risk of going underwater.
Right.
That's them like partially liquidating you.
Got it.
So that margin
That
call
makes
is
a lot of
very similar to what happens in a lot of these lending protocols, where you say, okay, I have a synthetic asset with collateral under the hood. Maybe I'm using Ethereum, maybe I'm using SNX to collateralize. And then if I'm coming at risk of going underwater, they can force me to close out fully or partially close out my position. And the person who forces me to do that will get a little reward for it.
So the peer-to-peer aspect applies to liquidation, is what you're saying.
Yeah, yeah, yeah. So if you're using one of these protocols with collateral and you're about to go underwater, you come into the liquidation range, then I could see that and I could liquidate you, and I would be closing out your position for you and then taking a little bit of your collateral, and then you'd get the rest back. Which is somewhat similar to what Robinhood would do to you when they margin call you.
Right, but the difference there being you'd be liquidated by the centralized entity rather than another investor.
Yeah, so let me just say again that that's generally how a lot of these work, but there are some detailed differences in how some of these various synthetic projects work. So synthetics itself, I can't remember exactly the details of that mechanism, but high level, that's how most of them work. And if they don't work exactly that way, there's something very similar to guarantee excess collateral.
Excellent. Awesome. So moving on here, if you guys don't mind sharing, what % of your portfolios are stocks, Bitcoin, ETH, and others, and where are you currently investing your money? I can share some info on this. I actually have not begun investing. What I have is remaining mining crypto, and so that looks like 60-40 ETH to Bitcoin. Simply because NiceHash was easy to use and NiceHash paid out in Bitcoin, right? So in the past, I used to really think, oh, Bitcoin and Ether, those are Ethereum are two good camps to be in, so I'm fine with that. So I'm only beginning to now think about, well, how else might I diversify? So that's where I'm at. One of the latent effects of learning a lot more about DeFi is that I will change what I'm going to do.
Good question. So I'd be happy to share as well. So I'll tell you like a little bit briefly what my journey was. So when I first started getting involved in this space in 2017, my thought was I want enough money in here that if it goes to zero, I don't miss it. But if it blows up, that I'll notice it. So it was, something like 5 or 10% of my net worth was in crypto at the time. With the DeFi kind of emergence, it really took off about a year ago. When that happened, and I went manic over DeFi at the same time that all other markets were looking worse and worse, like the stock market became kind of a worse deal. Price earnings ratios went way up since COVID. Bond markets, et cetera, were all bad. So I kind of had this flip where at this point I'm probably 99% crypto. So I went from about 10% crypto to somewhere around a year ago. I sold basically all of my equities and went into crypto. And the only ones that I haven't sold are like in my 401k and my IRA. And I've even thought about taking the tax hit and selling those, but I haven't done it yet. I've strongly considered it.
What a courageous example.
And then within there, my holdings are something like 60-ish% Ethereum, probably close to 40% DeFi tokens, um, maybe 1% Bitcoin. I own a tiny bit. I'm not an anti-Bitcoin person, but it's very small. And then I do own a tiny bit of some other Ethereum competitors. So long ago, I had bought into a bunch of Ethereum competitors. Cardano was one of them back in 2017. I sold all of those and rebalanced back into Ethereum, but I own a tiny bit. It's maybe 1% again, Solana. Um, I don't think they'll be an Ethereum killer. I think that they have a chance of carving out a niche though. So mostly Ethereum and DeFi on Ethereum, tiny bit of Solana, tiny bit of um, Bitcoin, no equities these days. That's historically I was all about equities. That's where all my investment dollars were going, but
Yeah.
not these days.
I should clarify, I'm kind of the crypto noob in this conversation, and the the percentages that I gave about crypto versus within, Ethereum versus Bitcoin, I do still own equities, and I am still actively investing in the stock market, and have a 401k and things like that. Um, none of those amounts are very large. I'm in a position where I've been correcting poor financial decisions for a few years now, and I'm happy that we're doing that. But there just isn't a lot available to be going into these, either into equities or into crypto. So, I strongly see myself as learning about DeFi to do something with my current Ethereum and Bitcoin holdings, right? Rather than actively put in a bunch of money, at least for the foreseeable short term future. But as soon as I feel like, okay, I've you know gotten out of student debt, for example, I've gotten out of these different types of debt, then I see myself putting a lot more time, energy, and money, relative to today, into DeFi. So let's
Yeah.
move on. Cowboy asked, what metrics do you use to assess the safety of protocols? I.e., avoid rug pulls, hacks, smart contract errors, audits, multi-sig, others.
This is a really good question.
Yeah, I was going to say one thing that I've learned from Rhett about this specifically is when it comes to the DeFi Pulse, right? The DeFi Pulse Index, I should say, the S&P 500 of DeFi. The requirements to be part of the DPI, correct me if I'm wrong, are need to be an Ethereum blockchain token, need to be subject to audits, right? Is there anything else there?
There's a number of inclusion criteria, and some of them are safety related. So, and the two main ones that are safety related are they need to be audited and they need to be around for a certain period of time.
Mhm.
So there's a risk associated with newness as well. And there are risks that maybe an audit can't necessarily pick up on because maybe like, okay, your smart contracts were written in what seemed like a reasonable way, but this thing could be manipulated in ways that were unforeseen. So to give a little bit more context on Cowboy's question, that is one of the risks of participating in decentralized finance is if I write a decentralized lending application, um, I could write that badly so that the person who lends might not get their money back. And it could have nothing to do with like, like what you think of as like a bank failing. It could have to do with like me just stealing their money,
Right.
right? And that has happened where someone says, "Hey, this is decentralized lending. Deposit your money," and then once people deposit their money, take the money and leave. And
That could be classified as a
rug pull.
smart contract error. Okay, rug pull.
If
Got it.
I intentionally took your money, that's me rug pulling you. So that's a common term you'll see in crypto. A smart contract error would be like, oh, I accidentally wrote my smart contract wrong, and someone exploited it and took all the money out of the lending pool. That has happened too. So there have been exploits.
Right.
So the the two biggest things by far, I think there's layers to this, but like at the highest level, like I personally don't use any DeFi protocols. I don't use them or invest in them if they haven't been audited and passed their audits. And I also um, generally will be a little bit more cautious if they're a newer protocol. Now, some of these like longer lived projects like MakerDAO came out in probably 2018, maybe late 2017. They've been around a long time. They've experienced multiple pretty harsh crashes. kept, stayed solvent as a protocol. They're a lending protocol with a stable coin, basically. And so you can see they have a long history of no rug pull, no audits, no failures under stress, and they have like a really trustworthy team that's well known. That's another thing I would say. If you have a team, if you know some things about the team, and they have, you can see reasons to trust in them. Look at their background.
At
So
this point, people working on crypto projects can have a crypto history, right? Ethereum has
yeah,
been around long enough that people are starting to have kind of a CV of here's what I've accomplished in crypto. And you're starting to see that, right? One example that I've seen of that is one of the biggest advertisements for Chia as a cryptocurrency, for example, is that their lead engineer has a background of creating different projects that were useful. I don't even remember the name of the exact project, but you're starting to see that as literally marketing for this is why this project is good because this person did this thing in crypto already, right?
yeah. The founder of Chia, he has a background not in crypto but in other technology. It was what's it when you pirate videos? What are you using? What's that called again?
Torrent.
Torrent. I think he was like the BitTorrent creator, something like that. Anyway, but like the founder of Yearn, this guy Andre, he's been a participant in a lot of different projects, and he's a pretty trustworthy guy. So if he founded a new project, I think most people would say, okay, he's not likely to be a con man. He has a long history in the crypto space, etc. So that's like something that I would look at as well. Um, and then I think there's also I gain more trust in a protocol that's used more as well, because the gains to be made, if MakerDAO has $10 in it, the gains to be made by exploiting it are pretty low. But if it has $10 billion in it, the gains are pretty high. So if it has, and MakerDAO has probably like $6 billion in it right now. But $6 billion has existed for a long time, is audited, and has not been exploited. Pretty trustworthy. Um, but yeah, DeFi Pulse Index. One thing I love about it is that inclusion criteria, where they try to filter out like projects that are likely to either be fraudulent or like high risk or low quality.
Lack a history of success as well.
Yeah.
Right?
Yep.
Excellent. Awesome. Great answer. Jamin Long asks, sorry if you already covered this, but are DeFi projects built on their own currencies or something else like Ethereum? Good question. I'll take a stab.
Yeah.
The majority of DeFi projects today are built on top of the Ethereum blockchain and oftentimes mint their own token, commonly known as an ERC20 token. Is that correct? So for example, the DeFi Pulse Index or DPI token is an ERC20 token that trades on the Ethereum blockchain. So that's my best attempt.
Yeah. So I think that's a great answer. So DeFi is powered by smart contracts, basically. Ethereum, almost all of it is on the Ethereum blockchain using their smart contracts. Some are on other blockchains like Solana. So Solana is what you'd call like a layer one. It's a competitor to Ethereum, and they have smart contracts so you can build on top of there too. So there's some built on there. Now you could think of a way you could theoretically build a decentralized finance protocol that also was its own blockchain. And in a small way, I guess Bitcoin is that. It's very limited. All it is decentralized money, and it sits on its own blockchain, and it serves just that one purpose. So you could do something like that. It isn't really done. So essentially,
it isn't really done, as in there's no appetite for it, or it isn't something that's been attempted yet.
Well, I think a little bit of both, and also, so if I say, hey, I'm going to build a decentralized lending protocol, and it's also going to be on its own unique little blockchain outside of Ethereum, you lose some of the magic of DeFi if you are cut off from the rest of DeFi.
Right.
And so, like the beauty right now of MakerDAO and Uniswap is I can borrow on MakerDAO and take that and trade it on Uniswap. And that composability of, hey, I have access to synthetic assets and lending and decentralized exchanges and other things like decentralized insurance. You can use all those things in conjunction with each other, and each one of them makes the other ones more valuable.
Right.
And so if you were sitting in your own little walled garden and you're like, hey, you can do decentralized lending on this one unique little thing that doesn't communicate with the others, no one's going to be that interested in using it. So there isn't a whole lot of that happening. Um, so yeah, so when you say built on their own currencies, so they're yeah, it's so it depends on how you phrase that. So most of them sit on top of Ethereum, the blockchain, but a lot have their own token, just like Phil just said. Um, some of them don't even have a token. It's just, hey, you have this system that you can use, and it sits on Ethereum. There's no token associated with it. It's just a protocol you can use.
So a token is not a requirement.
No, when Uniswap first launched, it had no token. So Uniswap, you could use it to trade assets, but it was just a protocol just being used.
I did read
And
that is the reason then that they airdropped Uni to the people who had been using the protocol at a later date.
Yeah.
Right.
airdrop means you just send some tokens to people. Hey, I can see this Ethereum address has been using our protocol. We'll just send them some of our tokens.
Yeah.
That's when they say an airdrop. That's what they mean.
But the reason that works is it's because it's an ERC20 token. It's compatible with Ethereum wallets.
Yeah.
Right. That's how an airdrop works because, hey, this is an Ethereum address. Therefore, it supports these ERC20 tokens. I can send you some Uni tokens now.
Yeah. Yeah. There is, when you say because it's Ethereum compatible, there is another whole category of decentralized finance, actually, which you would call maybe bridging. So, hey, I want to do DeFi things with Bitcoin, but Bitcoin is not, it's on its own blockchain. So there's a thing called WBTC, wrapped BTC, which without getting into the details, they've kind of bridged that over where you have one-to-one Bitcoin backed tokens, and then you can do stuff in DeFi with them, like lend them or trade them, etc. And so a lot of people who own Bitcoin are wrapping their Bitcoin onto Ethereum so they can use Ethereum DeFi. So there is a way.
Cool. Actually.
Yeah, there's a way to get across. If there's similarly there's wrapped Dogecoin. If you're a Dogecoin person but you want to do DeFi stuff, you can do that because there has been some bridging there.
We did have somebody that said, "Sell your Doge, it's going to crash and burn, not financial advice." And then they attempted to use a Dogecoin command in the bot, which yielded nothing, and they were then unhappy. So maybe I should put something into that command, something unique, maybe.
Just put like the Doge picture or something.
An Elon Musk meme of some kind.
Yeah, I wonder if that person's still in the chat. That's the person who asked about Cardano as well, but
right.
We didn't get to it.
That is true. That's true. That was Cardano versus Eth. Yep. Susie Suze, what are your go-to resources to get smart about crypto, especially for a newbie? Thank you for asking that question because I need that answer as well.
Yeah, so that's a good question. So I think a good starting place to just know, okay, here are some heavily used DeFi protocols. I guess you chatted it recently. The DeFiPulse.com, they just list a bunch of DeFi projects and they show how much total value locked they have. That's just how much their system's being used. It's not necessarily like locked for a long period of time, but like, hey, if you're lending in Aave, which is one of the decentralized lending protocols, then I'm lending $100 in there. That's $100 locked in their protocol.
So locked is really the sum of all of the
usage,
the value being deposited into those protocols.
Yeah. So you could just start at the top there.
Nice, Chipsky.
Just get right.
I have his phone number, and it was a life-changing phone number.
So you could go into DeFiPulse.com and just start at the top, click into, say, okay, MakerDAO, and read up about it. Go to their website, read about it. So that's a good place to start. Most of these protocols you'll find from DeFi Pulse, they also have Twitter accounts and Discord channels, which is Discord's a chat app that you can go into and you could ask questions and things. Most of them have documents in their websites that you can read up on. And then I would also say there's a handful of really good podcasts that I would recommend. So one of them is called Bankless.
Let me pause you there. Before Rhett recommends podcasts, let me recommend Rhett's Twitter handle. All right? So if you go to Twitter, if you don't have a Twitter account, don't worry. But if you do, this is Rhett on Twitter. Rhett is active in the crypto Twitter community. You could probably tweet at Rhett and get some information. And mark my words when I say that Rhett is a very valuable resource, and you won't always be able to tweet at Rhett and get an answer. So take advantage while you can.
I have
Go ahead.
188 followers, so I'm not. I'm, I do a little bit of commenting on Twitter, and I would be happy to interact with any of you there.
Awesome.
So yeah, some podcasts. Bankless is a great one.
Where do you listen to your podcast? That's a question I have.
I guess I'm a podcast noob. I use YouTube.
Okay.
So, Bankless is a great one. Let's see. There's one called.
Is this it here?
Yes.
Okay. I'll go ahead and post that into the chat so people can check it out.
Yep. There's one that's a little bit more in depth and kind of granular. It's a daily half-hour podcast called The Daily Gwei, GWEI.
This is an Ethereum term, right?
Yeah, Gwei is an Ethereum term. Daily Gwei is a pretty good one if you want to stay like up to, if you're wanting kind of like.
Is this it here?
Yep. Mm-hmm. Yep. If you're wanting to stay like up to like closer speed, and then Laura Shin has a podcast that I'm forgetting. Unchained. The Unchained podcast is really high quality. Laura Shin, I guess, was the first professional journalist to cover DeFi exclusively. Really great podcast. I watched that one on YouTube as well. There are a few others, but that's probably a pretty good starting point. Maybe, oh, well, okay, this one is a lot more in depth, and it's probably for the people who want to deep dive a little bit more, get a little bit more nerdy. But it's Hasu and Suzu, so HASU space SU Uncommon Core. That's what it is. So the Uncommon Core podcast. Mm-hmm. Yep. So Hasu and Suzu are two kind of big timers in the crypto community. These are deep dives, a lot of them, into like kind of heavy topics. I love them. If you're wanting kind of high level stuff, probably start with, either Bankless or Unchained and just kind of filter by topic. There are others. I should put together a list, but that's a good starting point, and that alone will give you probably hundreds of hours of listening time.
A list is if we do put together a list, we can host that list either in a tile under my channel or in my Discord server or something like that. I mean, maybe we could even put together a website if whatever we want to do. But yes, great answer. I haven't listened to or read any of these specifically, so I'm gonna get to it. Especially the podcast format's really easy for me to consume now, so I need to get more into that. We got Sean Quinton in the chat. Rhett, what are your thoughts about using sites like PancakeSwap or Nexo.io to earn interest on crypto assets?
It's a great question, Sean. Do you have any thoughts before I jump in?
I have some thoughts, but I don't feel like I have enough knowledge here. All I know is that PancakeSwap is technically not on the Ethereum blockchain, right? It's a BSC.
It's on Binance Smart Chain, yeah.
Okay, so yeah, that a little bit of limited knowledge on these platforms specifically. So I'll let you take it away.
Yeah, so let me first give a tiny background on Binance Smart Chain. I'm not a BSC hater, but there are some there's some good and some bad things about it. So Binance Smart Chain is literally basically a direct clone of Ethereum, only instead of letting anybody mine it, they just have 21 high power computers mining it that they control all of them, and that allows them to have a little bit higher scale. So fees are lower when you transact on Binance Smart Chain, but it does not have a lot of the features that make, I think, DeFi really powerful, which are decentralization, censorship resistance.
So when you say decentralization, you're talking about those 21 high power computers literally being centralized because they're owned by Binance.
Yep.
Yeah.
Okay. Owned or controlled. Yeah. And so when all of the miners are controlled by the same people, That means if Binance said, we want to go back and modify the blockchain and you no longer have your money, they could do that to you. And so it kind of undermines, in my opinion, the purpose of a blockchain a little bit. I don't mean that as like a harsh criticism. There's some positive aspects of it as well. But because it's basically a clone of Ethereum, it's easy to clone Ethereum-based DeFi protocols and drop them on BSC. Most protocols on BSC are just Ethereum clones. PancakeSwap is not quite a clone, but close to a clone of it. It's similar to SushiSwap or Uniswap on Ethereum. I personally haven't used it. I'm not a hater. I think if you're going to use Binance Smart Chain, two things. PancakeSwap is probably the most trustworthy of all of their DeFi protocols. So if you're going to use BSC, that's like a good place to start.
Do you know off the top of your head if their value locked exceeds other BSC projects?
I'm fairly confident they're the highest total value locked of all of BSC. Last time I checked, they were. And of all the decentralized exchanges on BSC, they're by far the highest. At least they were. I probably looked maybe a week or two ago.
Okay.
So PancakeSwap, if you're going to use BSC, PancakeSwap is a good place to start. I'll start with that. As an aside on that topic, rug pulls that we were talking about before and exploits are much more common on BSC than Ethereum. If you look at the last 20 exploits in all of decentralized finance, probably 19 of them happened on BSC. Even though there's less money there, so like like if you were a hacker or something, you'd want to be hitting Ethereum more. But so there's a lot more risk on BSC, but PancakeSwap is one of the lower risk. Nexo, I've heard of them and I'm not super familiar, so I won't comment on them specifically. I could come back to that next week, read up on them and come back. But kind of implied in your question is it good to earn interest on your crypto asset using DeFi? And that I say strongly yes. Like if you're going to own Ethereum or you're going to own, some other token, like you might as well earn yield on it. You can lend Ethereum and get a 5% interest rate, sometimes better. You can lend dollars and get even higher. You can lend these different things. And then there are higher risk, higher yield strategies we can get into at some point, but things like they call yield farming, liquidity provision, etc. Those are, they have higher risks, higher yields. If you understand the risks, that can be a great way to earn yield. So when I was saying earlier about, hey, 99% of my net worth is in crypto, all of my crypto is earning yield. Well, no, probably 99% of my crypto is earning yield. So I'm lending some of it, I'm doing some liquidity providing and some various other things. But so high level, yes, it's great for you to be earning interest on your crypto assets. Be careful about where you do it.
I think that's a great answer. Kuso.
Lowest risk
somebody
yield.
from Dedicated Wham, isn't it?
Yeah.
Yeah.
Of course.
How are you doing? Good to see you.
I met Kuso in real life for the first time recently. Great guy.
Awesome.
Hey, glad to have you. So lowest risk yield for ETH. I think there's 4 or 5 quite low risk things to do. So if you lend your ETH on any one of the like 5, so just to rattle off a few of the exchanges that are, or not exchanges, a few of the protocols that are like really safe places to lend ETH would be Aave, Compound, Yearn, Alpha Homora version 2, and Cream. All of those I would consider very safe. Last I checked, Alpha Homora had the highest yield. Yields vary within those. Any of those are great places to earn yield on ETH. I think Lido's ST-ETH, which is staked ETH, is also a pretty good, pretty low risk way to earn yield on ETH. Those would be my kind of first, kind of like, hey, these are some good safe bets.
So one question I have related to that is to interact with Alpha Homora, for example. Let's use MetaMask as an example wallet. I know to interact with Uniswap, SushiSwap, you're using the MetaMask browser and you're navigating to those sites. Is it the same process for Cream and for Yearn and for Alpha Homora?
Yes. So if you have your crypto in a wallet, MetaMask is the most common. if you have your crypto in a wallet that you can control, um, there's several of them, but yeah, MetaMask is probably like 90% of the usage. Then you navigate to the Yearn site or the Cream site or Alpha Homora, Aave, and then you connect it, and then you can interact in there with their UI to deposit or to borrow. Um, yeah, does that answer the question?
Yes, absolutely.
Yeah.
Awesome. Thank you for the sub, Sean Quinton. That's a first time viewer right there.
Oh, really?
Thank you,
Nice.
Sean Quinton.
Hey, glad to have you, Sean.
I also know Sean Quinton IRL, so
Oh, you do?
really
Cool.
appreciate it, my friend.
Yeah.
Um,
Hopefully, we get to chat with you more next week if people like this enough.
yeah, no, Sean Quinton is active in our crypto Slack channel, so I know that he's used PancakeSwap quite a bit. And when we originally chatted about it, I actually had no idea what PancakeSwap
Hmm.
was.
Hmm.
So, um,
Yeah.
I feel better now knowing what the purpose of PancakeSwap is and where it lives and why it exists. So
Yeah. Yeah.
overall, I'm going the right way.
Yeah. Yeah. I have nothing bad to say about PancakeSwap. The rise of PancakeSwap really surprised me. Actually, I didn't think that Binance Smart Chain would get so much adoption, but it's still.
Yeah.
I mean, it's still like 95% of DeFi is on ETH, but Binance Smart Chain is getting a fair bit.
Yeah.
There's this follow-up question of Kuso's. For that yield, would you just lend, join a liquidity pool? Um, those are kind of the same thing, if I'm understanding you right. Like, if you are, oh, you mean a liquidity provider? Yeah. So the safest and simplest thing to do is just to lend. And I named some of the places to do that. You to be a liquidity provider. This is like a longer topic that I'll try not to dive too deep into for everyone else. But high level, Kuso, I think to be a liquidity provider between Ethereum and ST ETH and ST ETH on Curve or Convex, I think that's a great solution as well. You'll earn some yield there. And what you're basically doing is you're facilitating trading between Ethereum and staked Ethereum, and you get paid fees for doing so. It's pretty low risk because Ethereum and staked Ethereum are kind of like matched up in price. Um, there are some risks of being a liquidity provider. If you're a liquidity provider, you're facilitating transactions on decentralized exchanges, and if you do that, there's some risks that you bear that are proportional to the likelihood that the assets become uncorrelated with each other. One goes up and the other doesn't, or whatever. And being a liquidity provider between Ethereum and staked Ethereum is relatively low. They're at low risk of decoupling. So anyway, that might be a lot for a lot of people here, but I hope that's helpful for Kuso.
That's actually I think a really really good topic for a follow-up episode.
Yeah.
Right? We've talked about Bitcoin, Ethereum. We've talked about DeFi. We've talked about DEXs, right? From an experience, a UI UX experience perspective, when I logged in to SushiSwap for the first time on MetaMask, you see trade and you see pools, right? Those are the two top level tabs for SushiSwap and Uniswap. I think that might be a really logical segue for us for an episode 2, where we can talk about what is liquidity provision, why does it need to exist, um, because that's not something that I had ever experienced in traditional finance or even really heard about, right?
Yeah.
And so, to an extent, I started beginning to hear about it with the GameStop issues, right? Why orders were not fulfilled. That finally was the first story that ever came out that kind of connected to that idea of how does the liquidity behind the scenes work, right? So I think that'd be a great episode 2, kind of a first 15 minutes topic for us to go through.
Yeah.
But going back here, Kuso's got another question. When lending is your return better if you lock it in longer? Question. Does that work? How does that work? I know there were some tokens that had some features where the longer you lock it in, the better the rewards were.
Yeah, so most of the primary protocols that I just mentioned have no time lock aspect. So I won't rattle them off again, but all those, 5 DeFi lending protocols, I don't think any of them have hey, lock in for a longer period of time to get a higher return. Aave might, I'm not sure.
I could see that being an adoption thing as well, right? Like an upstart protocol looking to, gain more adoption, I could see that being something like that, something similar
Yeah.
to, these pairs where one offers an incentive.
Yeah.
But
Yeah. And I've heard it discussed, and I've heard other time locking things in DeFi, but not with lending that I've seen. I would love that as a feature. If I could lend and say, okay, you'll get 5% if you lend, but you'll get 10% if you lend and guarantee you'll stay locked in for a year or something. Then, if I'm like, well, I don't want to sell my ETH in a year anyway, sure, sign me up. But
sounds like Kuso just gave us a great protocol idea to build.
yeah,
It's kind of
um,
like a certificate of deposit in a way,
yeah,
right? Where I'm willing to lock up longer, I'll get a little bit higher rate. Hopefully, it won't be 0.12%
yeah,
though.
yeah. Well, and there are other time lock features without getting into all the details. Like one of the protocols that I have some of their tokens and I have their tokens locked in. If you hold on to their tokens for longer, you get more rewards. So there are some time lock aspects, but it's not lending that I'm doing in that case. So there are some time lock things.
Staking has a
Um,
big time lock aspect to it
yeah,
currently.
yeah. So that is a thing in DeFi, but I haven't seen it a lot in lending. It probably exists, but it's not highly. It like the biggest uses of decentralized lending right now are not offering that kind of time lock that I'm aware of.
It's a good question though.
Yeah,
Not one that I had a ton of knowledge of, but
yeah,
I hope to be a lot more versed in the different protocols, from episode to episode as I learn more.
yeah.
Right. I've really just recently logged into SushiSwap for the first time, right? And Red showed me how to do that. And I realized at that moment that, you know, I may have never done this on my own, right? And so I do think that it's valuable information to put out there for anybody who has questions. And so, I'm really appreciative and grateful for all of you who have come by tonight. If we have more questions, we can take them. If not, I think we've gone for about an hour and a half. I think we could wrap up now. So, we'll leave it to all of you and Rhett, if you've got anything else you wanted to fit to end with, um, toss it in the chat.
Um, yeah, just on that asterisk on your last question, Kuso, I might be wrong about Aave. They might have a time lock mechanism. I know you can get variable or stable interest rates as a borrower on Aave, and that might there might be something similar on the lending side. I haven't looked into that.
Also, what I did want to say is
Yeah,
if
thanks.
you join my Discord, I created a new channel called Crypto Gurus. If you send questions in Crypto Gurus, Rhett and I will track those questions and we'll build future content around those things, right? Obviously, this first episode was really intended to be foundational and a Q&A. We want the dialogue to evolve over time, and we want to be able to prepare uh, to answer the questions that people really are wondering about, right? So Maxwell, thank you. We try really hard, actually. Um, so with that, you have any last words, Rhett? Also, thank you for being here. I've pasted your Twitter information several times into the chat. I'll do it again. Rhett's very active in the crypto space on Twitter. So if you're looking to get closer to, the big influences and voices, Rhett is often interacting with them. That's been one way that I've started noticing different protocols, for example, like Alpha Homora V2. And yeah, follow Rhett's Twitter. I mean, I think we're all trying to build a community of people that share accurate and useful information with each other, right? I think that's really the point of this. So I've already followed Rhett, and I'd recommend you do the same thing.
Yeah, I appreciate that. So, on that note, by the way, maybe for next episode or something, I can put together a list of like, okay, here's some crypto Twitter accounts to follow, and can maybe even flesh out the podcast list as well.
I mean, this is definitely a Twitch stream, right? It wouldn't be a real Twitch stream if we didn't have a tier list.
Yeah, that's true.
So we got to make a tier list of podcasts. We got to make a tier list of Twitter accounts. Got to make a tier list of protocols. I mean, why not, right?
Yeah, yeah, I'm down. I'm down. Yeah, we'll do that. we'll do that, and hopefully someone finds it useful. And then the other quick thought I wanted to give. Oh yeah, on the Twitter thing. Right now, I don't tweet a ton, but I reply to a fair few tweets, and I follow some good people to follow. So I'll put together a list for that, and I'll probably start tweeting a little bit more myself. So
Awesome.
anyway,
Yeah, that's great. I realized when I first started talking to Red about crypto that he has a lot of useful insights and information, and wanted to put this together because I want to get that information out there. We are planning on putting this content up on YouTube, so if you want to go and review, Twitch VODs don't last forever, but we can put it up on YouTube, and we'll just keep each episode, keep reposting our episodes on YouTube, so you can go back and review whatever you might want, and hopefully that helps us grow the overall community and helps the conversation evolve in powerful ways. So, but with that, I think we'll call it a night. Thank you everyone who stopped by to our first episode of CryptoNITE. There are multiple puns in the name there, but that was the best thing I could come up with before today. Maybe we'll change it, but I think it's pretty good. And again, want to thank Rhett. Looking forward to having Rhett in my unfinished basement again in the future, hopefully. And we'll see if we can't get a regular cadence going, right? Where we'll just have a certain night that will be CryptoNITE, right? So
yeah, really appreciate you guys.
awesome. Thank you, everybody, and have a wonderful, wonderful night. We'll talk soon.